I think the dollar has come off a bit since Trump came in, and it has been on a slide since the middle of December after the last interest rate hike. Neil Wilson, ETX Capital. The Bank of England is expected to leave interest rates unchanged. Why and when do you expect the BOE to raise rates?
I think there's increasing evidence that the UK economy is holding up pretty strongly. In following the Brexit vote, everyone thought that we'd fall off a cliff edge and that the economy were going to melt down, but that's definitely not happened. And there seems to be GDP growth continues to be very strong, and inflation is the thing that's picking up, and I think that's starting to make the Bank of England think that interest rates could have to turn higher before they go lower. And I think at this meeting we'll get a bit more evidence. Although the bank is expected to leave interest rates on hold this time, we might start to get a flavour of whether it anticipates raising before cutting again. I think in terms of timing, the key thing will be Brexit. I don't think the bank would want to raise interest rates at a time of great uncertainty in the UK economy, and I think it could be damaging if there's still lots of doubts around the process of negotiation and things like that. However, if inflation really does start to pick up, then it might be minded to act. But again, Mark Carney said that the bank seems happy to let inflation overshoot for sort of temporary periods. So I personally am not convinced that it's looking to raise rates anytime soon. But it may offer some slightly more hawkish noises than we've heard in the past at this meeting.
The US Federal Open Market Committee will give a statement on Wednesday about monetary policy. Will this statement be bearish or bullish for the dollar?
The statement should be fairly bullish still. I think they're still going to be looking at 3 interest rate hikes. I can't see that having changed. The thing that's going to weigh on the Fed this week will be the GDP miss from last quarter. The US economy's slowed down really, and it's only grown at its slowest pace since 2011. So there's that is going to weigh, but I can't see the Fed doing anything other than sort of sticking to the line that it's from the last meeting. And I think we're going to look at 3 interest rate hikes, and that could be pretty positive for the dollar. I think the dollar's come off a bit since Trump came in, and it's been on the slide since the middle of December, since the last interest rate hike. So the positive spin that the Fed can give for the US economy and an interest rate path ought to be fairly bullish for the dollar.
The RBA will give its monetary policy statement. What insights could it give for the Aussie dollar traders?
The RBA I think it's minded to keep interest rates on hold throughout 2017. We've got inflation has missed. It's just at 1.5%. That's a long way short of the 2 to 3% target that the RBA has. So we'll be looking at details on how it views balancing the risks around financial stability against its support for supporting the economy. I think based on the last set of minutes that we've got, the last statement, the barrier to further rate cuts is pretty high. I don't see the bank sounding especially dovish. I think that they've been fairly positive on the Aussie economy. We've got stable growth coming from China. There was a quarter-on-quarter pickup in the Chinese economy the final quarter of last year. I think we're getting coal and iron ore prices are rising. In terms of the Aussie dollar, we've got the US dollars come off a little bit. The likelihood is that the RBA is going to stand pat. It's going to suggest that they're going to balance the risks of financial stability against the economy, and it's sort of going to be more of the same than we've heard. And I don't see particularly anything to suggest that they're going to alter course on rates, and I think we're going to be stuck at where we are for a while yet.
Thank you for watching The Week Ahead. Be sure to stick with Dukascopy TV throughout the week. Goodbye for now.